TJ the Wheel Deal coming at you live. It is Monday, May the 5th, Cinco de Mayo, 9:49 a.m. Central Time, Texas time. We're going to get into it, guys. We're going to take it nice and slow, not in a hurry. Don't got much going on. I've already made the trade, essentially, that I was looking to make for today. So I'll walk y'all through that, the mindset. But what I really want to do is I want to talk about the TastyTrade platform and why, for me, for our situation as a family, it was just superior to Robinhood. And that's why I titled it, How I'm Able to Make $500,000 More Monthly on the TastyTrade platform. We're essentially doing the same thing, the same exact style that I had on Robinhood. But because I'm able to sell the other side, I'm simply able to collect premiums that I otherwise wasn't qualified for on the other platform. So anyway, let's get into it. What I want to do is I want to start with the spreadsheet, the Excel sheet, because it is just more picture friendly, if you will. It's easier to showcase it because I can make the I can make it the font bigger and that kind of thing. So let's start with the open, or actually we'll go there with the open share. So what's going on? I got two lease positions in yellow, and then I've got 6,500 shares of Tesla, 50,000 shares of TSLL, which is a leverage ETF on Tesla, and then there's the 10,000 shares of Amazon. So that is what's going on in the portfolio in a nutshell. And I got to do this STAR, right? So I got to eventually put SoFi up top, Tesla, Amazon, and then right on the bottom. So I'm matching up to the little acronym STAR for the four horsemen. So Riot got the equivalent of 100,000 shares with 1,000 leads, paid $2.17 for the leaps. The current share price on Riot's about $7.81. The current leaps price is $2.08, so down about $9,000 on the leaps already. On SoFi, it's the equivalent of controlling 300,000 shares because there's 3,000 contracts. Paid $2.18 for the leaps. The current share price is $12.83. The leaps are going for $2.74 as of this morning. So spent $217,000 on Riot. They're currently going for $208,000. Spent $654,000 on the SoFi leaps. Are currently going for $822,000. So up quite a bit on those leaps. On Tesla, 6,500 shares cost $261.93. They're currently going for $276, so 1.7. Currently going for almost 1.8, so up 94,000 there. And on TSLL, 50,000 shares costs $377,000. They're currently going for $489,000, so up 112,000 there. Amazon, 10,000 shares went for $2 million. They're currently going for 1.875, so down 156,000 there. So that is what's going on in a nutshell. And then the total on the bottom is to the good, 218,000. The current market value of all the shares is 4.9. The total invested for the shares was 4.765. Brokerage cash in the account is 8.7. That might be different now because I spent money on the leap. So let me update the brokerage cash here. So let me go. I'm going over here. It's 8.486, 840. 8.486, 840. So this is 8.486, 840. So that is updated. That is updated. So that is what's going on in a nutshell. The total portfolio value, that's realizing all of the premiums and stuff from this other sheet, but that's not total. That's not net liquidation value. That's something. Net liquidation value is take your ball, go home. The net liquidation value on the account right now is about 10.5, 10.5, something like that. So anyway, so let's go through the positions, right? So what do we got here? We've got Amazon, we've got a covered strangle. So there's the 10,000 shares owned, as I just showed y'all. And then we got an agreement to buy 10,000 more shares at 175, an agreement to sell the 10,000 shares at 205. We've obviously collected premiums on those. That's utilizing 1.75 in collateral, but that's not really the capital required on TastyTrade, and that is the main reason that I'm able to make a lot more money on the TastyTrade platform, because you can do more. You can do more because of portfolio margin. That's one. The other one is if I sell a cash secured put, I can turn around and sell a short call or a covered call, if you will, a naked call, without having to wait for the cash secured put to either expire in the money, out of the money, or whatever. It's the only way you can sell a call on Robinhood is you got to own the shares. On TastyTrade, you don't have to. So that's just, those are the reasons right there in a nutshell why I'm able to make a lot more money on the TastyTrade platform. CleanSpark short strangle. What's going on with CleanSpark? There's an agreement to buy 200,000 shares at $8. It's currently going at $8. So those are about to be in the money, right? And then we got an agreement to sell those shares at $11. So again, on Robinhood, the only thing that I'd be able to do is sell, just tie it to 1.6 and agree to buy CleanSpark at $8. And yeah, you make the 52,000. That doesn't change. But then it's just like it either expires in the money or out of the money. You just gotta wait. Where here I'm like, well, but I collect some more money by agreeing to sell the other side. So I pick up another 54,000, and I just wouldn't be qualified to be able to do that on Robinhood. Simply would not be able to. Would not be able to. So that's the big difference. On Amazon, I'm able to do all of that on Robinhood. Sell the cash secured put, sell the covered call because you own the shares, but it would require 1.7 in collateral. On TastyTrade, it won't. And I'll show you all the cap requirements when we go on the actual, when we go on the actual, on the brokerage here in a little bit. In phase, another short strangle. So let me refresh that. So we've got an agreement to buy shares at 45. Those are in the money, and we've got an agreement to sell those shares at 55. And again, we don't own these shares yet. So this is just another way to make more money that you're not qualified to do so on the other platform. Him, same thing. Cash secured put at 35. The calls at 42. It's currently at 40, so that's a sweet spot trade, right? Short strangles are sweet spot trades. You have the cash secured put strike, and you have the covered call strike. The short put side, the short put strike, and the short call side. And then in between those strikes, that's going to be your sweet spot. That's where you want the stock to be. And that's where it is right now. Obviously, HIMS has earnings after the bill today. So this thing could be trading at $50. So I have to manage it accordingly. I might have to roll all of these things up. I mean, I could also buy some leaps right now. I could buy some shares right now and take all the pressure off of the upside. It's only 50 contracts. So there's definitely enough money to just buy 5,000 shares and call life good, turn it into a covered position. But I don't feel like doing that. Hood short strangle. The puts are at 40. The calls are at 55. It's at 47. So it's in the sweet spot. Marathon short strangle. The puts are at 12. The calls are at 15. Stocks at 1290. Sweet spot. NVIDIA. The short puts at 100. The call is at 120. It's at 113. Again, sweet spot. Palantir, again, they got earnings today, right? So got the put at 15. The call at 130. It's right in the middle at 123. Sweet spot. So I like our chances there. I think Palantir is going to have a massive beat. I could see it going to 130, and that'll be a positive problem. I'll just roll things up and to the right. Not a big deal. Riot. Cash secured puts at 7. The call's at 10. And then we bought the leaps. Bought the leaps this morning at 10 for, this is 6/20/26, 6/18/26. So I got to change that. There we go. SoFi puts at 12. Backstop trades. Then I got the short strangle on SoFi. I got all kinds of stuff going on here. Cover calls at 15 for June of 25. And then I've got the leap at 15 for June of 26. So doing pretty good there. Tesla short strangle. We got all kinds of stuff going on in Tesla. We got cash secured puts at 250 for July. We've got cash secured puts at 200 for January. And then we've got some covered calls and naked calls at 310 for July as well. 315 of those contracts. And then on TSLL, we got CSPs at 770. We've got the covered calls at 1050 for this Friday. And then we've got calls at 1070 for June as well, picking up a crap load of premiums there. So it's going pretty well. There's 18,750 contracts, guys. It's crazy. It's absolutely crazy. About 2.3 in premiums. The net premiums are less than that now. I think it's about like 1.8. Let me update that number here. Let me go to Tasty. Let me update that number. It's 1744835. 1744835. 1744835. There we go. So the difference is all the rolling. That's the difference in a nutshell. So we already did this one right here. So we're good to go. So now let me catch up with you guys, and then I will remove this from there. Stop screen, present, share screen. You'll see some kaleidoscope action. Perfect. So it'll be queued up, ready to go for the brokerage. Let me catch up with you guys and call it good. All right. What's going on? Dar, what's going on? Mundo, Jose, Shamu. Morning, TJ. My question was about TastyTrade, but it seems like you're about to answer. I'm still on the ropes on the move over. No worries, man. This platform is not for everybody. Good morning. Glad to have you back. What's going on, Vic? Hey, what's going on, Tevez? Good morning. Been going through some live stuff and haven't been on for a while. Glad you're doing well. Thank you. TJ was going to write some covered calls. What do you think about 15 for June the 6th? That's the main one I'm looking at. I think it's pretty safe. Earnings are behind us. Obviously, it didn't pump. The only thing that's going to send SoFi up, in my opinion, right now is going to be rate cuts. So I think that that's going to be just fine. I think I've got the 15s for, I'll look here in a little bit. I'll pull up the portfolio in a second. Steven, what's going on? I'd feel better with a higher strike on the covered calls. Travis, I have covered calls. What's going on, Mr. Premium? T billion will mirror you and take 5K per month. TJ, any trade on Palantir before earnings? Is buying leaps a good idea? And you really want to buy leaps whenever the volatility is a little bit has contracted, right? You want to get better value. So I would say that on the other side of the leaps, on the other side of earnings would be better because it would theoretically be an IV contraction. So I don't think that buying leaps right now is optimal, in my opinion. I think that earnings plays, like, they have to be already in place. I've got the short strangles on Palantir, but I'm trying to build a position, guys, that I want to be in for the next year to 18 months. So I want to follow this stock up, down, and sideways for the next 18, 24 months. So it's just a little bit, the mindset's a little bit different. Any thoughts on Lucid? Man, Lucid's tough. How do you hold cash in TastyTrade? I mean, it's just sitting in the brokerage. I don't have anything. I'm not doing anything yet as far as trying to get interest on the cash or any of that stuff because I'm making so many trades. There are some instruments that you can do on that you can utilize on TastyTrade to be able to collect interest on that, but that is just not anything that is a priority right now because I wouldn't be able to use those funds for like 30 days, I think. So I'll make a lot more money just wheeling and dealing. And eventually, when we have money that we can just park there for a while, wait it out, then I'll be like, okay, cool. Well, let me go buy this instrument and then sell cash puts with that collateral, and start getting all fancy. I have to have a talk with TastyTrade to see how I can set it all up, but I'm not going to lose access to that cash for 30 days. Just zero interest in doing that. Appreciate you guys. So now let's click on the actual brokerage. And let me go over here, and you guys can see there, that's 1.744. That is all of the options year to date. So that is the net premiums right now. It's 1.7444. So if we waited until our expiration dates and we didn't give any money back, that's how much we've made in premiums already. Not bad. So these are all the positions. I'm going to actually start on the little account and work our way up. So my son's account, we've got 1, 2, 3, 5 positions here, and I'm looking to clean this thing up here. Looking to clean this thing up and probably just go all in on TSLL. To be honest with you guys, we'll see. We'll see. So we got Clean Spark. We've got Short Strangle. We've got the CSP sitting at 7, and we've got the short call sitting at 12. So that's a sweet spot trade, right? Between 7 and 12, we're good. It's at 8:01, so we're good. We just need time to run off the clock. Riot, we've got 3,000 shares at 689. It's currently at 771, so that part's good. And then we got cash secured puts at 7, and then we've got all the shares for sale at 9, all 46 days out. On SoFi, there is a poor man cover call campaign going on where we bought 110 leaps at $20. 409 days out, so June 18th of 2026, down 34% on those leaps so far. And then we've got calls that we sold against those leaps for June, and we picked up about $2,000 on that, and we're up 74%. Option would be like, hey, you need to take that one off, but I'm like, no, because I'm down a lot on these, and I need to collect as much money as I can. And then I'm hoping for SoFi to pump. That way I can do these again, roll them out more and collect more premiums. And I'll keep that $20 price target there for a while. But if there was a real nice pump and SoFi went to like 13.50 or 14 and I got to even, I'd probably close out that entire trade, to be honest with you, because I feel like I can make more money over here on TSLL, or I can make more money with these miners right now at these levels. So I just think the risk reward is better right now with Clean Spark, Riot, possibly even SOXL and TSL, all of them. So it's just, this is one of those things that I've added to do all over again. I'd already made a shitload of money on SoFi before in this little account. I wouldn't do it again. I would not buy those 110 leaps. It just wasn't a good deal. Like buying them right now would be great at 158, but paying $242 for them was not a good trade. It just wasn't. It might work out, but it still doesn't make it a good trade. Listen to what I just said for you guys. It might work out, but that doesn't make it a good trade. It was not a good trade. I jumped the gun. Option was telling me don't do it, and I was like, you gotta have faith. Sound like an old George Michael song, and it did not work out. Will it work out eventually? Probably, but that doesn't mean it was a good trade. It wasn't a good trade. Yeah, so Excel got a little strangle going, 8 and 18. I feel good about that one. And then TSLL, there's 500 shares owned. If I could restructure this portfolio right now, I'd probably have the 3,000 shares of Riot, and I'd probably have the 3,000 shares of TSLL, and I just wheel them really, really aggressively, and I feel like I could grow the account faster as opposed to waiting on SoFi to deliver the goods. But we'll see what happens, If I would have been available, I wasn't, because we're celebrating our anniversary. I could have already been out of these leaps because I was at about break even on our anniversary on April the 28th, after the earnings or whatever, right? April 29th, and it would have been great, but I wasn't available. So it is what it is. Intermediate account, this is a $600,000 account. There's $497,000 in cash on this one, so that part's good. What do we got on Clean Spark? We've got a strangle. 100 puts at 8, 100 calls at 11, On Marathon, another strangle, 100 puts at 12, 100 calls at 16. So these puts on CleanSpark are basically at the money right now. Riot, there's 5,000 shares owned, so that part's good at 653. And then we've got 50 puts at 6 and 50 calls at 9 for June. That part's good. SoFi, there's 400 calls at 16, 46 days out. So that kind of answers Tevis's question on how I feel about that. And then I've got 400 cash secured puts in the distance, a backstop trade, and then I got 400 leaps as well. And you can see that these are doing a lot better, and they're at 15, not at 20, like on the little account. So I was just more responsible on these. And then TSLL, there's 5,000 shares owned at a pretty good average of 769. And then I've got 100 CSPs at 77 and 100 the calls at 12.7, 46 days out. So that portfolio is looking pretty good. Now we'll go to the top, feature another account that's about $500,000. There's 268,000 in cash on that one. And we've got just 5 positions. So Neo, there's a strangle going at 4 and 5. PayPal, there's 2,000 shares owned on PayPal. Underwater a little bit on the shares, and the shares are for sale at 72.50. On Riot, we've got CSPs at 7 for June the 20th. And then we got CSPs at 11 for June the 20th, 50 contracts each. And then we got the shares for sale at $12 for June the 15th. So I could theoretically sell 50 more calls and do that, and put them at like 10 or something like that. So that is something that I could do to kind of like sell the other side and match it all up. In fact, I'll probably go and do that right now. So I've got the calls at 12. I could probably do something like this right here. Actually, I don't want to cause any more stress though. So let me just do that. Let me match that up over here. 50. And you can see how you sell the other side. Your buying power is only reduced by $41. It's just a no-brainer on this platform. You see how fast it is to make those trades as well. That's the thing that is just awesome. It's like, oh, Robinhood's so user-friendly. I'm like, well, I can make trades a lot faster on TastyTrade. SOXL, there's 1,000 shares owned. CSP's at 10. Covered calls are in the money at 11 for June. And then I've got the strangle going at 10 and 18. So that part's good. TSL, there's 1,500 shares owned at 709. And then I've got a big strangle going, 100 CSPs at 77. And I've got the 100 covered calls or naked calls technically at 14.7. And then I've also got the shares for sale at 9.7. Those are in the money. Or they might not be in the money, actually. It says in the money there. Oh, yeah, it's at 970. They're 977. So that is what's going on with that portfolio. Now let's go to the featured portfolio. But first, I'm going to check in with you guys, make sure nobody's waiting in the background if anybody tried to join. I'm going to go ahead and put the invite out here one more time. Copy, paste. If anybody wants to join, I am live. Is that spreadsheet available for sharing? I'll have to figure out how to make it available to you guys, because I did that last time and then y'all started switching stuff on y'all's end and it was switching it out on my end. So I don't know how to make a template for that particular one there. I'll have to get with Bill White, somebody a lot more nerdy than I am. So that's what's going on with that one. So Amazon, what's going on with Amazon? We've got a coverage triangle going. We got the 10,000 shares. We got cash secure puts at 175. We got the covered calls at 205. So that's what's going on with Amazon. It's at 187. So a big sweet spot of 175 to 205. CleanSpark, we're going to buy 200,000 shares at $8, and it's right at the money. And then we've got an agreement to sell them at 11. So obviously we're winning in a big way on the call side, and we're getting challenged on the CSPs. So if I wanted to bring more money through the door, I could simply roll down on the calls at 11. But because the short interest is pretty high on CleanSpark, I just don't want to do that. I just don't want to be going back and forth because there's so many contracts. So there's fees involved, right? So I'm just kind of like waiting it out. There's 46 days out. I'll really like to manage this position 21 days out. And I'm going to hopefully roll and expand. I like the cover call sitting at like 12, and then hopefully CleanSpark trading at like $9 by that time. That would be ideal. But I'd like to be at about $4 to $5 wide eventually. Once I can be about $4 to $5 wide on CleanSpark, then I'll be able to wait out the entire expiration because I'll minimize the tail risk because the cash secure put and the cover call are going to be so wide that it's like a drunk driver will be able to drive through anyway, even though it's kind of sloppy, which is, what the share price is. It's like the equivalent of a drunk driver. So anyway, on end phase, the short strangle was at 45 is in the money, and then we got the call side at 55. On short strangles, guys, it's just a heck of a lot easier when the cash secure put is the one getting challenged versus the covered call because it's not covered, right? So it's just call it a short put versus a short call. It's a lot easier to manage for me when the short put is getting challenged versus the short call getting challenged. Why? Because when the short put's getting challenged, all that means is that I might have to buy shares of a good company at a pretty decent price. And end phase at $45, my goodness, that's appealing. That is appetizing. Hibbs, what's going on with Hibbs? This one's risky, guys. This one's risky to the upside. This thing's got all kinds of short squeeze potential. So we got the puts at 35, the calls at 42. So how would I manage it if it went parabolic? I roll the cash secure put up, collect all of those credits, and with those credits, I'll be able to roll the call up and be okay. So it's not as big a deal. It's not as dramatic as people make it sound. Hood, 40 and 55. Earnings are behind us. Sweet spot trade, sitting in the sweet spot. Marathon, 12 and 15. It's at 1291. Not a whole lot to say there. Sitting in the sweet spot. NVIDIA, 100 and 120. So pretty wide. I like it at about 30, 40 wide because this is a volatile stock. Earnings are not behind us. So that's the thing, right? So I got to be cognizant of that as well. And then we got, excuse me, somebody's blowing up my phone. Where are we at here? NVIDIA, 100 and 120. When I can expand this thing out, 30, 40 bucks, it could ride right through all the way to an expiration. It might take me a year to get there, though, guys. And I'm in no hurry because I'm collecting credits along the way. And eventually, I want to see this extrinsic value at like 100 grand. I would like to see the extrinsic value at like 100 grand on all of these short strangles. Why? Because then that's how much money I'm going to make when it's all said and done, right? Because eventually, I believe that it'll expire worthless, and I'll be able to write it out, and I'll be able to sleep like this because I'll have widened it enough. So it's roll and expand, roll and expand. That's the name of the game. Roll, expand, collect credits, right? So it's sell put, sell cost, collect premium. On short strangles for me, it's roll, expand, collect credits. Roll and expand, collect credits. And you got to be able to write it out. You can do that. The TastyTrade thing is like, 21 days to expiration, manage your trade. At some point, if you rolled and expand wide enough, collected enough credits, you got to be able to handle that last 21 days. And that's the way to be able to handle it, is to have a wide, quote unquote spread, if you will, from your cash secured put to the covered call, or short put, short call, whatever you want to call it. Riot, 776 is what it's trading at. Got the CSPs at 7, got the calls at 10, and then I got the leaps at 10, 409 days out, already down 10,600 on the leaps, and I just put those on. I obviously can run the poor man cover call campaign and sell an additional 1,000 calls on right now. I don't know that I really want to do that. I mean, I could look into it. I could do it at $10, but I just feel, and and it's a little bit safer with Riot because they've already had earnings, right? So let me look at it. I was kind of hoping for a nice big fat green candle. Maybe Riot goes back up to like 850 because it was trading at that on Friday. And then I'd be more comfortable. But let's just see what it looks like. So we go over here, can match it up at 10. And do 1,000 contracts. Let's see what that would do. We see how you pick up $32,000 and it only takes $643 in buying power. So that's how it's kind of a no-brainer. It's crazy. Yeah, I got to do that. I got to do that. I got to. How am I going to leave a $30,000 bill just sitting on the ground? It's just financially retarded, right? So obviously I have to manage it now. So if Riot moons up, I got to manage those covered calls, but I can always just keep rolling. And then the beautiful thing is those calls got challenged. That means that the cash secured puts are not being challenged. And that means that the leaps are printing, and that's the nature of a strangle, right? It's like you're strangling this stock and you're going to win one side, manage the other side. That's not that dramatic, guys. Like this game is not that dramatic. So you got to focus on the dollars, not the drama. That's it. Like that's the quote of the day for you guys. Focus on the dollars, not the drama. SoFi, we've got the 15 calls as I showed y'all earlier. So there's 3,000 of those. So again, for Tevis, that's the one that I'm in. 3,000 calls at 15 for June, 46 days from now, and I feel great about them. I don't think they're going to get challenged. And then I've got the $12 puts, 256 days out, and I've got the 3,000 leaps. These are doing a little bit better than the ones on the little account. And then Tesla. This is always the featured position on the channel, right? We're Team Tesla. 6,500 shares of Tesla, doing okay on the shares. We got 35 cash secured puts at 250. We've got 315 calls. 65 of them are covered. 200 and whatever it is, 250 of them are not covered or naked. And they're doing pretty well, up a cool $158,000 today, or $237,000 collectively. There's still $603,000 of meat on the bone. So if there's someone that's pushing for Tesla to have a couple more of these days, it's this guy. And I wanted to get to 250, and I want to pick up 3,500 more shares of Tesla at 250. And then I've got the backstop trades at 200. Those are doing horrible today, but that's okay because that means that these are doing well. I'll take it. And they're in the distance, right? 256 days out, no big deal. Then TSLL, there's 50,000 shares owned. Got the calls at 1050, collected a crap load of premiums. This was my first zero DTE, did it last Friday. Got my ass kicked. The option came on the channel. Thank God he did. It's like, hey, you can roll it in next Friday. Picked up like another $22,000. And now we look up and we're like, holy moly. Holy moly. There's still $16,000 of collateral. Mind you, there was a roll there because I picked up 7,000 and then 22,000. So I picked up like about 30,000 or so, 29,000. So if I gave back 16,000, I still realize a real nice win. But I'm gonna milk it. I'm gonna milk it, and if Tesla TSO shoots back up, I'll keep rolling it a week at a time. You just lateral move in them, staying at 1050, and I'm just gonna keep collecting. But if TSLL drops down under $9, I'm gonna buy 50,000 shares. So I've got it covered. Got 50. Another 500 contracts at 770, and then I've got the 500 calls, the short strangle right here at 1070. So this is my insurance policy to do what I'm doing on Tesla, guys. Is ultimately if I can get to 100,000 shares on TSLL, that kind of gives me the license to be acting like a fool over here on Tesla and doing all of these naked calls. And I still got more, guys. I still got more. I can match up. I could match up 500 leaps. I can match up 500 calls, short calls, to match up the 500 cash secured put. So I ain't done yet. I ain't done, but I'm waiting for big green candles to do that so I can bring in a lot more premiums. And that's why these 500 backstop trades, these cash secured puts, are absolutely paramount. But what I want to show y'all now is let me first make sure there's nobody waiting in the background. Okay, there's no one. Okay, perfect. So here's the thing. This is what I want to draw y'all's attention to. This is why TastyTrade has been such an awesome move, and I cannot thank Vlad and the Robinhood team enough for kicking us off of the platform, because you guys did us a huge solid. I didn't feel like it was a solid at the time. I was irritated. I was perturbed because I didn't want to make the move. I was very, very comfortable on the Robinhood platform, but everybody kept telling me that, hey, you're going to be able to make a lot more money. This is a blessing in disguise, all of that stuff. Our family dynamic is too complicated. Robinhood just didn't want any part of it, and that is okay. That is okay. We're not for you, and you're not for us, right? We weren't compatible. It's all good. I don't have anything bad to say about Robinhood. I'm just thankful that we're on this platform now. We're able to do the things that we want to do because we want to make as much money as possible. That's the name of the game. But I want you to look at the capital requirements. Look at what's going on with Amazon. I've got the 10,000 shares, and I've got 100 cash equivalents at 175, and the 100 calls at 205, but the cap requirement is only $769,000. That just makes it a lot easier to deal with. Over here, we got cash secure puts at 8. We already know that on the spreadsheet it was 1.6 million in collateral, but it's only using $985,000 in capital required to place these trades, and I'm able to sell the other side. I mean, it's an absolute no-brainer, guys. In phase, I've got the 50 CSPs at 45 and the calls at 55, and it's using $123,000 in collateral. Just do the math. I would need $4,500 50 times over to do a traditional cash secured put. On him, same thing. $3,500, the $35 put, $3,500, 50 times over. That's what the collateral would be. And then I've got the 50 covered calls, and it is requiring quite a bit of that collateral right now. Why? Because the call has been under pressure, right? So your options buying power and all that stuff is going to fluctuate based on how the stocks are performing. So keep that in mind as well. So the hood 40 and 55 capital required is only 76,000 on that one because we're on easy streets in the sweet spot. Marathon 12 and 15, 200 contracts, cap required $176,000, guys. Nvidia 100 and 120, cap required $120. I mean, it's nuts. You know, it's nuts how much more you can do. I mean, this is $250,000 in cash secured puts. That's how much money you would need. $10,000 of contracts, $100 cash secured. It's $100 strike price, guys. So just you got to really pay attention closely and look at the math and see how much more flexibility you have on this platform because of portfolio margin. So then you got Palantir 115, 130, utilizing almost $200,000. Why? Because the covered call has been under a little bit more pressure. So they're like, hey, we're going to want a little more capital there. Riot, y'all, I've seen everything that I got going on there, and it's requiring $750,000 in capital. SoFi, big position, requiring about 1.2 in collateral or in capital. And then Tesla is the one that's requiring a lot. And that's why I sold the 150,000 shares of Riot on Friday, was because the buying power was at like 600,000. So I was like, let me take pressure off of the account. I'll restructure the Riot position. I'm still long and strong on Riot. And I was like, I'll buy the 1,000 leaps, and I'll, in lieu of the 150,000 shares, eventually I'll buy another probably 2,000 contracts that have 3,000 leaps on SoFi. I'll probably have 3,000 leaps on Riot as well. But the only way that would happen is Riot's going to have to dip under $7 because I want to get a good deal. Like I want to get a good deal. Now I'll just stick right here. I'll sell the strangle. I'll keep doing the strangle and the poor man cover call campaign all at once. And that is why I love the platform. And also you can just right click and you can make trades really, really quickly on here. Anyway, let me answer any questions that you guys might have. Where are we at here? Tesla new reports declining sales. Yeah, I saw something. It was 38% negative year over year. I'm not sure where. It was a notification on my phone. Let me see if it's still here. There was a notification on my phone that came in Spain, 36% in April, despite EV sales surge. Yeah. So that's the core business right now still, and it's declining. So that gave me a license to sell a bunch of calls. And we'll see if it works out. It's working out, but we'll see if it works out. But I'm trying to be in this trade for 3 to 5 years, right? So I don't mind keeping this on the books and just collecting credits, expanding. Right now we got the CSPs at 250 and 200. So I like to lower those eventually to like 150, because at 150 is give me all the shares of Tesla. At 150, I just feel like mathematically, no way gonna lose money there. And I like to be at least at 400, hell, maybe even 450 on the call side. That's a wide enough road so that inebriated driver, that drunk driver, which is the share price, it'll make it. It'll make it to the finish line, despite all the tail risk. Wanting to utilize option selling in my Roth IRA, would like to only use index or ETFs that I plan to hold long term to be safer and less volatile instead of individual stocks. I did not leverage ETFs. Any recommendations of funds you like? Man, I'm not really your guy for that because it's just way too boring for me, and that's cool. That 100% is not going to make a lot of money though. I mean, there's always the Qs in the SPY. They're no-brainer plays. You're not going to lose money. You're just not going to make a lot either. SGov, EG, liquid. There you go. DJ, I am in crazy pound recover call positions for 21 November 2025 for 170 strike. Got an EMS future roll up after market came back very quickly. Any thoughts on managing this? I want to keep the stock. Well, you're at $170 strike. I mean, I don't understand what we're talking about. Palantir is trading at like 120. So I don't understand. You're out of the money. I mean, any pressure that you're feeling is only mental, because it's not like somebody's going to go buy your shares for 170 when they can go buy them in the open market for 122. So unless I'm misreading this or not understanding, I don't think you have to manage anything. I think you got to sit on your hands. Tesla headed back to 220 to test new reports of designing center. I mean, I hope so. I hope so. I hope that you're right. I hope that you are right, because that means that all of those calls will have printed. All of those calls would have printed, and I will be happy. I will be very, very happy. I would be irritated that I didn't put the other calls on if that happened. So we'll see. We talked about the spreadsheet. I'll see if I can make that available to you guys. Happy morning, DC. We're live. Glad I'm here now. Hey, TJ, just tuning in. Did the thesis on Riot change since the quarter results? Not really. Not really. I just wanted to continue to build towards not owning any shares, or just shares on the two companies that made sense to own shares on, and that is Amazon and Tesla. Look at the way the portfolio looks, guys. There's 10,000 shares of Amazon. I'm working on getting to 10,000 shares of Tesla, and then I got 50,000 shares of TSL. Want to get to 100,000 shares. That's a pretty solid portfolio. It would be 10,000, 10,000, and 100,000, and everything else is with force strike. I feel like that's being very, very efficient with my capital. I've got Amazon. I just can't be the guy that sold Amazon, dude. I've thought about it. I just don't want to go down as that guy. I don't want to go down as the guy that had 10,000 shares of Amazon in the year 2024 and 2025, and I sold them in the years now 2034, and this thing's trading at like $1,400 a share. I don't want to be that guy. I don't want that to be on my track record. So I have to hold on to them and be thankful that I'm making about $60,000 a month running the covered strangle, because that's different than the short strangle. I'm running the covered strangle on Amazon, making about $60,000 a month. I'm gonna go cry in my Ferrari, so to speak, right? That's just like the joke that rich people use. I don't own a Ferrari. We could probably afford one, but it's just so stupid. Especially considering that the Tesla that we have is fast. And I got the need for speed. What's going on, Uzi Options, my man? Thank you so much for joining in. How are you?
I'm doing well, man. It was a busy morning. Sorry I didn't see your invite there.
No worries, my man. I'm glad to have you on. I'm not able to do the stream tomorrow because we have my mom's services tomorrow.
Yeah, no doubt. My condolences.
I wanted to just kind of like touch base with everybody today and see where we're at, man. I can use your help. I'm knee deep. I'm knee deep in Tesla, and I'm feeling pretty good about it. But I did study the chart. I did watch 3 other YouTubers that put out daily charts on Tesla as well. And it seems like 260 is a very important level for Tesla, according to what I saw. And I feel like if there's a pivot, right? Because there's always like a seesaw on a stock. Yep. Like there's like the tipping point. I feel like that tipping point is around $293. That's what I was seeing, but I'm so rusty. I'd rather defer to an expert like you, Uzi. If you could do me a solid and first tell me how your weekend was, and if you want to pull up Tesla and let's talk about the chart on Tesla.
Yeah, the weekend was good. Got some things done around the house. I like to do a lot of my own stuff around here. I like to do my own yard work and landscaping, gardening and stuff, because it's really good to work with your hands.
Sure.
Frees your mind, and forget about saving the money. It's just good when you can do it yourself. If you can't do something yourself, then you got to pay someone to do it. I'm a firm believer, though, if you can handle it, do it yourself. It's therapeutic. It's like hobbies. It's good stuff. But weekend was good, and busy morning on this morning with some trades. We opened up a bunch of strangles. We did one in ENPH, hood, and I can't remember the third one already. So I'm so shot. But yeah, opened up some strangles this morning. And I see your Tesla, man. Your Tesla it's respecting that 200-day moving average. It didn't get through it yet, so it's leaving your calls alone for now. Did you roll any of them out yet?
Yeah, I'll show you what I got going on with them here in a second. I just I forgot I have to change the contract. The number of contracts on Riot is the call is filled. So that part's good. So what I'm sitting on Tesla right now is I've got. Let me actually do this. Where is StreamYard? Okay, let me go ahead and present here.
Oh, Qualcomm. Qualcomm was the third strangle today. So we did Qualcomm, ENPH, and hood.
So what I got going on here with Tesla is right over here. So I'll pull up both of them, Tesla and TSLL. So I've got the 6,500 shares. I opened up 35 cash secured puts at 250, 74 days out, because I want to take ownership of 3,500 more shares, especially now that we don't have any Riot shares and we only have Leaps and the Strangle. So I don't believe that owning shares is capital efficient, but at the same time, if you don't own any shares, you can't walk away from the portfolio, right? So I want to have the 10,000 shares of Tesla and the 10,000 shares of Amazon, and eventually 100,000 shares of TSLL as a swing trade. Right now, I've got 50,000 shares of TSLL. So I've got the 315 calls for July the 18th at 310, and then I've got 500 CSPs at 200 for January of 26. And then the calls are July the 18th, so 74 days out. And I also have the CSPs at 250, 74 days out. So I don't have anything in the immediate future. So this is going to put me right there with, close to the next earnings report, if you will. And I am expecting Tesla again. We'll see what the chart says here. But Uzi, I am expecting Tesla to play in a pretty wide range for the next couple of months. And that range for me is probably as low as like 175 and as high as probably 350. I just can't see a catalyst to get it to those levels because I rely on the fundamentals, right, as well. But at the same time, sometimes things happen on the charts and this thing will just go to an all-time high and it won't make a rhyme or reason. So what do your charts say? Do you want to pull that up if you can?
Yeah, let me get to sharing. I'm just trying to adjust everything so we stay current here. Let's see. Let me the screen size.
So I feel like I didn't address this one too much. Did your thesis on Ryan change? No, I feel like Riot has put themselves in a situation where they're going all in on the data center, and this is as big as they're going to get on the mining side of things for now. And I'm looking forward to having a conversation with Jason. And then I just really, because I have an idea of what they're trying to do and why they chose to do it, but I'd rather hear it from him because I feel like he knows the business a lot better than I do, being the CEO and all. So we'll see. But I am excited about the 1,000 leaps. I'd like to get more, but at the same time, I want to make sure that we're collecting data and not paying for it, right? So I can't just go crazy buying leaps because, every day the leaps lose value as far as the time goes. So anyway, what's going on with the chart? Uzi, talk to me.
So the last time we spoke, we were talking about the area here. I guess it took off right after the earnings, right? We had earnings.
Yes.
It didn't sell off like we talked about. Hey, it didn't sell off. The earnings were terrible.
Yes.
They did stop burning dealerships and firebombing and Molotov cocktails and everything. So it looked like things were, the worst was kind of over, and it was, in the sense that price action is everything, right? So all the news can come out, and it can be good, bad, whatever, but price action is what rules. And the price action said, hey, listen, the market did rally too, which helped things, but price was not ready to go any lower. We had somewhat of a triple bottom down here, as we can see. Now, the encouraging thing for longs is you've got a whole lot of previous support in the same area that we highlighted to the left. So you've got not only about 6 months of a basing pattern a year ago that held it up, but now you've got about 2.5 months of basing pattern in the same price range that held it up as well, in spite of all the negativity. So in my opinion, I believe we've seen the lows for now. I don't believe price is going to roll over here from the 270 level, even though it did bounce its head up against the 200-day moving average. I don't believe the price now is going to fall down and somehow now find the strength to break through these lows that we just put in. So I don't believe the downside is really where the risk lies. The upside would be where I would think the risk would lie. But you've got a lot of headwinds above where Tesla has to get through before it can really start to chisel up against some of this area that it fell from in the 360 range when it fell out of the sky and came down to these lows. So as far as your long terms, I believe, until we get closer to that, they're safe for now. And I do think the price is now going to chop around. See, price right now is in between the 200-day moving average in orange and the 50-day moving average in yellow.
Yeah.
So what we've got here is we've got basically a tug of war where price is going to be challenged to get through either one of those. I just got, pardon me 1 second, guys. Sorry. Pardon me 1 second. My house cleaner is here and wants to get paid.
No worries.
That's the one thing I don't do myself, bro.
We have a house cleaner here right now as well, actually.
Timing is everything, right? So the house cleaner wants to get paid, and we want to talk about stocks.
She's just better at it than we are.
Hold me 1 second. Babe, there you go. Okay, so getting back to business over here. So yeah, a price is going to have a difficult time, I believe, getting through the 200-day. Earnings are out, so that didn't have the oomph, if you want to call it, or the power to get it through. Now we've got.
So this orange line is the 200-day, and the yellow line is the 50-day, or no?
Yes. Now.
So then talk to me where I see that cross, because it looks like they had a cross.
Yes.
So talk to me about what are the implications on the chart when that happens.
And thank you for bringing that up, TJ. That is the issue we're going to talk about, because this is what's called a death cross, when we have the 50-day moving average come through the 200-day moving average to the downside. Now, if you have it in reverse, where you had the yellow coming up through the orange, that would be what's called the golden cross. And that usually suggests higher prices, because now the trend is changing. You're going to have more bulls coming into play who are not already in the stock. You're going to have shorts looking to get out of their positions who are short the stock. These are some major moving averages that most all technicians look at. And even if you're not a technician, but you're a fundamental guy, you've been somewhat taught to look at the 50-day and the 200. Those are just the most, like, you can't be in this business and not know what the 50-day and the 200-day moving average is. You're not in this business for long if you don't know what they are. So that said, when you have this bearish death cross, it traditionally suggests lower prices. Now, that in and of itself is not enough really to push it through, in my opinion, this strong area of support. Because if you notice, sometimes, and this is what happens too, is you get what's called the lag effect. Price already came from the highs. I'm just going to lower this a little bit so we see. The highs of 488.
Right.
The price was already falling, right? It's already fallen so far that sometimes you get the lag effect. So you'll get the death cross. Okay, it'll be short-lived, meaning we might get another little bit of a pullback here, just to like a support area. Let's call it the 50-day moving average, and then it'll find its next level of support, which would be a higher high. Because if you look at these highs here, these are all kind of in the same price range, right? So these aren't any higher highs. But the minute we can get a pivot, and I'm thinking a pivot would be a great place right around that 50-day moving average, that would be your next higher high in a sequence. And I'll just put a little mark here so we can kind of highlight that. If we can get a pivot somewhere around this 50-day moving average, which actually would be right in the middle of the Bollinger Bands. Now, the Bollinger Bands are these two red outside lines, okay? The yellow line is the middle, is directly right in the middle between these 2 points. So if we get it's kind of ironic, right? Where we have the 50-day moving average lining up with the middle of the Bollinger Band. So I believe this is where we might come to a pullback, a little bit of a trading time frame in here, which would be the next pivot where prices then can start to maybe resume higher on either good economic news, maybe some good news out of Tesla. Maybe it'll coincide with when Elon finally steps down and turns his focus back to the company. So a pullback, sure, but I don't believe we're going to fall through here. This is going to be one of those, I believe, where the 50-day moving average catches itself and then begins to turn back up, and then we might get that golden cross, because these two moving averages are very close to each other. Yes. And one of the two things is going to happen. It's either going to continue lower, the 50-day moving average, and we will come down to these lows, or the price will turn back up, and I believe will come through as a golden cross.
So I think there's a couple of catalysts to be aware of. One is robo-taxis is less than a month away in Austin. Mm-hmm. They're going to roll that out right in Austin.
Sure. Excuse me 1 second.
So,
come on, Alan. Come on. Go ahead, buddy. Okay.
So that is going to either be the most bullish thing that has happened for Tesla in a long time, or the most bearish thing. And what do I mean by that? So they're going to roll out 10 or 20 robo taxis, right? They're Model Ys that will not fully autonomous. There will not be a driver behind the wheel. Whether or not they're going to be remote controlled, operated, I don't know. I don't work at Tesla. But this is what I do know. If this thing goes off without a hitch, Uzi, and people are, you using the Robo Taxi app, and they're getting from point A to point B without a hitch, forget about valuations, forget about fundamentals, forget about any of that stuff. This shit's going to go up probably to like 350 or 400 just cuts. Because people have been waiting on this for a very long time. Because at that point, it's going to be pretty safe to say that Tesla has solved FSD. If you have not driven in Austin, dude, Austin is not easy to navigate. I was actually very surprised that Tesla chose Austin of all the places in the world. Like Austin is tough to navigate, dude. You got to be on your P's and Q's. Like the guy that designed that highway system there was on LSD. It's confirmed. The dude was on it, and they set it up to be a bottleneck so that there would be a lot of congestion if people chose to move there, and it would keep people from wanting to move there. They wanted to control the population in Austin, and people didn't listen, right? Because to me, it's my favorite place to live in Texas. So people kept moving, and it's just an absolute bottleneck. Everywhere you go, it's a bottleneck in Austin. So if Tesla pulls it off, my goodness, dude, that is going to be extremely, extremely bullish. Forget about the numbers. Forget about the fact that the cars are on decline and all that stuff. Because this is now it's a SaaS business potentially. They could sell this technology to other car manufacturers and bring in a shitload of money from all the cars on the road, not just Teslas. That's the part of the story that a lot of people seem to be missing. Flip side of the coin. Let's say these 10 to 20 cars, they go off the gate. They go out the gate and they're off, right? The Kentucky Derby happened on Saturday, and that's one of the first things that the announcer says when they open the gates. And they're off, and they go. And what if half of those cars either is in an accident or causes accidents right out the gate, or they're looking like those cheesy Waymo videos where the Waymo's like driving against the flow of traffic, and then the police officers like trying to get the damn car to do something, like it's all confused, right? Like it just came out of the bar after being there for 8 hours drinking or whatever. So if Tesla has those kinds of issues and they basically have to pull that little fleet out and be like, turns out that we're not ready, or we're going to have to scale back, we're going to have to taper expectations, bro, this shit's going to like 175 with the quickness, in my opinion. Golden Cross, Death Cross, crisscross, whatever you want to call it. I feel like there comes a time to where it's shit or get off the pot time. And I think that June is shit or get off the pot time for Tesla. I don't know how to do these surveys like Amit does on his channel and the Tevises and all these other nerds do on their channels. But let me ask you guys this. Do you guys think, as it pertains to FSD, is this robo-taxi, this launch, is it shit or get off the pot time for FSD as it pertains to Tesla? So I want you to type in shit or get off the pot. If you believe, because I believe that that's where it's at. Like Tesla has backed themselves into a corner. And you want to hear something else that could be very bearish, Uzi? If they were to postpone that date for whatever reason, even by just a month, catastrophic.
Good points. You're raising some really valid points, and you know a lot of what's going on with Tesla. Let's say behind the scenes.
Catastrophic for the stock, bro. Catastrophic. I'm talking shave 100 points off this thing with the absolute quickness. Now, would that dip get bought out pretty quickly? Probably. And for all of those reasons, that is why I have all of those calls. Because I'm like, I'm already stuck with the $261 average. The least I could do is collect a shitload of rent on those and then some. You know what I mean?
Yeah. Do you have any data on Waymo? Is Waymo in Austin yet?
I think they're launching. I know they're in San. I've ridden in a Waymo. I was one of the. They had like a trial run in San Francisco several years ago, and I rode in a Waymo. They started doing it a lot in Phoenix, I believe, because Arizona is pretty friendly towards that kind of thing.
Yeah, I'm just curious if they've already proven themselves there. Then yeah, it's all or nothing for Tesla.
Yeah, the way that Waymo has to do it, dude, is they have to literally map out every square mile, every square inch of the city, and then they're able to do it. Whereas like Tesla's using like 9 cameras, and just essentially just vision, right? Like just like kind of like the way that we drive, like our main sense that we use to drive is vision, right? So they have some really good cameras on the car, and they're just like kind of like seeing what's in front of them and then following accordingly. And obviously, if they go through a route, they're collecting data and stuff, which is great. But Waymo essentially has to collect all of that data, and then they're just kind of like following their little map and stuff. So I just think that in my opinion, it's just not as intuitive. So I don't know. When did the death cost happen? Can you walk us through that little, because that's a big deal technically with the stock, because that is historically a very bearish pattern, correct?
It is, but I have seen them in the past where they're kind of like I said, like a rear view mirror. I mean, I'm not trying to poo-poo it, but in the past I've seen where price has moved so low already that the move is basically in, and then it curls back up and crosses back through. So it's at this point, time is what we're going to need to determine that. But the higher, the statistics are, yes, when you see a death cross, you're going to get lower prices. But there are times, and especially with a name like this, where it's already come down from 488 down to the 200 level, let's say, the move is in. And now it's about to reverse and turn back up and catch all the shorts on the other side. Oh, you know what, TJ? Pardon me 1 second. I gotta take care of something with the cleaners. I'm sorry. Give me 1 second, buddy.
I'm actually trying to figure out how to do a survey.
Oh no, yes. Yes. That's it. All right. Sorry about that, everybody. Should be good now.
You good?
Yep. Sorry about that. I have a rental, so I had to let them into the rental, and so they can keep going. Guys, with death crosses, I don't want you to think that you can just make believe they're not there. So if you're in this stock, you need to be on your toes. TJ's well positioned, but if you're in this stock and you're not sure what's going on, you can always get out and get back in, right? But
Yeah.
when you have a death cross, it does suggest lower prices, because now you've got, again, all the people that watch these type of things and know that the action is usually negative, they're going to position themselves, and that could put pressure on the stock. Now, here's what I would say: if you're in the stock and you're not sure, if you lose the 50-day moving average, then I think we have a problem, because that would suggest now not only do we have the death cross, we have the 200-day moving average stop the price in its dead tracks, and the 50-day moving average could not hold it. I would think we're going to come back down, and then yes, retest these lower area prices, which also coincides with the lower Bollinger Band. So the line in the sand, I would say, would be the 50-day moving average for anyone who's in the stock and considering, what do I do? What do I do? You know, TJ's position, he's got a lot of time on his options. So, and he knows he has a plan for whatever does happen. He wants to own more shares anyway if the price drops. You know, but that's expensive. So if you're not prepared to do the same, I'd say the 50-day moving average would be your line in the sand, right? If you do get out and price does hold again down here, you can always get back in. So, you know, no harm, no foul. You'll get out and you'll be able to get back in and maybe ride the price back up. But it doesn't make sense to hold it if it breaks the 50-day moving average, because then you've got maybe the forces from this death cross in play, and you're going to at least test these lows again and potentially come through. Like TJ said, if that Austin test drive with the FSD doesn't work out, then that could be the catalyst which would send it through this area, for sure. But just looking at the chart, it's hard to tell if it's going to happen, right? Because we can't tell the future, but we can look at the technicals, so we can say, look, this 50-day moving average, if that doesn't hold, then we have really nothing holding it up except for the price action down here, which is a good level of support in about the 220 range. And you could say 220 to maybe even 200 on a flash, like not a flash crash, but a flash through. Sometimes you get so much selling pressure that you might, fall through the support momentarily for a day or two, and then it recaptures it. But for now, we have to use what's in front of us, and that are the powerful moving averages. Okay, we do have some Fibonacci levels that I had up on the chart. So prices right now sticking right near the 23.6 Fibonacci retracement from these highs up above down to the lows. So this is a Fibonacci retracement from the low to high. So right now it's wait and see with this 50-day moving average, and or more news that might come out.
Yeah, time to do another stock, Uzi?
Yeah.
Dare I say it? But I gotta look because I'm in it. Throw Palantir up there, bro.
Yeah, so Palantir I looked at over the weekend, TJ. Here's the thing with that, right? This thing is a strong puppy, and it's got a cult-like following, and it's in a sector that, the USA is looking to beef up some of its neglected, defense systems.
Yeah.
And AI and high tech, communications and surveillance systems, and I think Palantir fits the bill there. I don't know everything that they do, but I know they're a great company.
So I'm 74 days out now because I've already had to roll this 5 or 6 times. So I'm for July, and I'm at 115 on the put and 130 on the call. I started off at 70 on the put. And I kept following it up because I was getting pressed on the call side. So I'm like, so people are like, oh my God, you're getting wrecked. And I'm like, dude, you know that I could roll the put too, though, right? Like, I mean, do you like, I'm just like, it's people like comment on X and they comment on here. Like, before you know the comment, I want you to really understand that I kind of know what I'm doing here. And I just need you to know that if a stock goes up, I reserve the right to roll the cash secured put up too.
Yeah, and these levels on the chart are
like, what's wrong with people?
These levels are your levels, DJ. These 110 and 70 from one of our previous conversations. I know you rolled the 110 up, but these were your previous levels, 70 and 110.
Yeah, so now it's 115 and 130.
All right, let me edit this then. 115.
115 on the low end. Dude, I have zero interest in owning Palantir at those levels. But what I would like to do is if it comes down, I'll leave it at 130 and it comes down, and then I'll lower that 115 to 110. And now I'm creating the width that I'm looking for. It says you can do it in the YouTube chat, is what Tevis is telling me. But I've been messing with this thing, and I'm right clicking. I don't see anything on right clicking. On all, nothing. It says I can delete a comment, put a user in timeout. I'll put one of y'all on timeout just to see what it feels like. Who wants to go on timeout? I'm practicing today. I was watching a Jesse Dow stream one time, and somebody was like popping off on Garcia, I think. Jesse was like just putting people on timeout, bro, and banning them and stuff. And it was like the funniest shit I'd ever seen. This shit was like, dude, it literally was like YouTube. It was like comedy gold, bro. Like, it was like, no, get the fuck out of here. You're out of here. It was just like, I was like, somebody woke up on the wrong side of the Cybertruck today, you know? I was like, oh my Lord. Oh shit. Talk to me about Palantir. What's going on with Palantir, bro? This thing doesn't make it. We're not even going to talk about valuation. Show me the chart.
Yeah. So now, sorry for all these lines. I'll explain what these lines are to everybody. Again, we have the orange 200-day moving average, the yellow 50-day moving average. Okay. The reds are the Bollinger Bands. As I hover on them, you'll see them light up darker. So those are the Bollinger Bands. Now, this white is a horizontal trend line, which was a support trend line. Okay. It became a little bit of resistance when price came through it, but it stayed strong as support. And then this trend line up above here is just what I use as a trajectory, that if price gets away and starts to run up, a lot of times you'll see price will reach this upper trend line based on other previous high swing highs. So this is a swing high, and then you have another swing high here. So if price gets out of control and starts to rip, you know, you are looking at about the 175 to 180 level. Now, what we noted in our previous discussion on Palantir, and I think it was right around this area here, going back around a week and a half ago, price was just hovering around this trend line. And what we talked about was that in this massive sell-off we've been having, price never even penetrated its 200-day moving average. It tried to get to it,
yeah,
and it never penetrated. And what it did do, though, was it held strong at right above the 61.8 Fibonacci retracement level. Now, when you get a retracement from the lows to the highs and back down, and you hold that 61.8, or even never even gets to it, you've got your uptrend still intact, I should say, intact. And it was, because you can see price never got down to the 200 or the 61.8. It pivoted, turned right around. Came up through the 50-day moving average in yellow, retraced just to test it for maybe a 2-day period here, and it hasn't looked back ever since. So this is one of the strongest stocks out there, even given the pullback we just had, which was huge. So I don't know really what's going to take this thing down, even if they have some questionable earnings. You might get a pullback to this support trend line here, this ascending trend line. So if news isn't so great, okay, but they talk about the future that, you know, it'll be better, let's say. So I can see a pullback coming to the trend line. Let's call it the $100 level. But if news is great, I think we're going to see this thing just like rocket straight up.
I mean, and news is going to be great. They're going to have a beat. They're probably going to have a guidance raise, and they're probably going to come in north of a 40% cake. So mind you, Palantir, if you look at traditional metrics, Palantir could grow at 100% CAGR for 3 to 4 years and still be extremely overvalued by traditional metrics. And I'm talking about giving them that would put them at a PE of like 100. And I'm just saying that after they deliver that kind of growth, so just keep that in mind, right? Where you're paying about $650 for every dollar of earnings, right? That I think their forward P is like north of 600. So this thing doesn't make any sense logically, but it's also sometimes there's just that darling stock that everybody wants to be a part of. And retail got in very early. I was fortunate enough to get in day one, and I stayed in until it was like 70ish. But even I left a lot of money on the table, obviously. So now I'm like, well, how can I make 10, 15,000 bucks a month? And I was like, well, let me do a strangle, and I got 25 contracts. But once I get the width, I get to where I have like 30 to 40 points to work with because it's a very volatile stock. Then I'm gonna have 100 contracts on. You know what I mean? That way I can make 40, 50,000 a month, and I'll forget all about all the money that I left on the table because now I have a cash flow machine again. But I'm not comfortable putting that amount of contracts on right now because I don't like my positioning yet. Right? Like it's going to take 5, 6, 7 cycles of the short strangle, rolling, managing, etc., before I can get wide enough to where I'm like, okay, I'm comfortable with my upside risk, and I'm not really worried about the downside risk. It's easier to manage anyway.
Now, I'm not a big divergence type of visual guy, but for those out there who look at RSI and who believe in divergences, we do have a divergence though, because price is at previous highs, all-time highs, yet RSI is not even near the previous RSI high levels of, let's say, 82, and then we had an RSI high of about 85. So we do have a small divergence. Price is at all-time highs again, yet RSI is lagging. So that might be a little bit of a stick in the mud to the reasoning for it to go high. Not the reason it wouldn't go higher, but I'm just saying this could be an indication where it might not be so rosy on the upside, even if it does go higher, because again, divergences do occur, and sometimes they do show their that it is like a, let's say,
but if that RSI were to push up higher, wouldn't that send the freaking stock up another 10 or 15% pretty quickly?
Oh yeah, it could. Like, for example, at this moment though in time, when price is at the same price levels it was previously, we're just seeing that the RSI is not reaching the same levels. So the relative strength isn't as strong as it once was.
Right.
Now, if we get good news and we get a gap up in price on the earnings, then of course, yes, RSI can shoot right through this, and then this conversation will be mute. But at the moment, just looking at all the technicals, we're seeing that even though price is at all-time previous highs, RSI is not near. It's still overbought, but it's not at the same levels, and it can't even make new highs at this point. Yeah, just something to keep in your back pocket. So what do I say that? Because if we do get a gap up, because price has been running up so much, we might get a gap up open, let's say up here, okay? And then what we have is we have what's called a gap and crap, where the gap's up here and then sells off all day until it comes all the way back down here to these levels here. So that might be what's indicating, meaning, the RSI is not so strong, relative strength isn't as strong. We get the gap up because they blew out numbers, but there's nothing really to sustain it because you really don't have the buying like you once had or the relative strength. So even if you have a gap up, it might not gap up and keep going. We might get the gap up and then, profit taking hits, and we get the close. We get a hangman candle.
I'm only talking about price action now. Forget about valuations. I think this thing's going to go up because I think Mr. Market loves it, and I think that the people that are in, they're not selling, and I think the new money, which is institutional money, they just barely started making money on Palantir, and they want to keep the party going. They know they were late to the party, but that doesn't mean that they still can't make a lot of money. You know what I mean? So I just don't think. I mean, and if it drops, I don't think it goes lower than 100. Like, this thing is just a monster, bro. It is a monster. It's changed a lot of people's lives. I mean, it's one of the biggest winners that I've ever had. And now I'm like, okay.
Just looking at the,
go ahead.
I would think that I just pulled out the Palantir just to check quickly the short float. I would have thought, being that everyone thinks it's overvalued, that the short float would be a lot higher. He's only got about a 2.3% short float. That's nothing.
There's a lot of new money in Palantir, dude. There's a lot of new money in Palantir, and you have people that have been holding since the DPO or shortly thereafter. And you're like, on all the FaceTime, dude, when people have Palantir stock, they act like they would have to sell one of their kids or something. Like when you talk about having their Palantir stock get called away, it's like sacrilegious, you know? So I've never seen people love a stock as much as they love Palantir. And I'm just like, I don't have those menu items in my hamburger stand. I'm like, dude, this shit can't make me enough money. And Palantir's premiums weren't that good. That's why I was kind of okay selling the damn thing. And I was like, I'll go make more money in Tesla. And I feel like I am making more money in Tesla. You guys will see that I have all the calls there. But I am monitoring it because I do think that Tesla can go to 340 overnight. And holy shit, you know what I mean? I'm going to be in trouble. I'm gonna have to be rolling this shit out to January, right? So I know what it is. But keep in mind, I do have those 500 cash secured puts that people seem to forget about. And I got plenty of buying power. I could increase the cash secured puts to 250 if I needed to, and bring in a shitload of premiums that way. And that would help me to roll up the cover calls as well if I didn't want to add so much time to the clock either, right? So like my first thing is I could roll the calls to match the January puts. So now I have like an official short strangle over there, and that would already put me at 400. And then I could keep rolling the puts up to help me roll the calls up. So, I mean, there's things that I can do.
Yeah, no, you definitely have some choices and some options at your disposal. The 130 strike calls on Palantir, though, when do they expire?
No, this is already for July. Like I'm already, because I'm already on I'm like 5-6 rolls deep on this thing already because I'm rolling and expanding, right? So I've obviously gone from 110 to 130 on the call side, but I didn't want to be losing a bunch of money along the way, so I rolled up the cash secured put. Ideally, I would like for Palantir to come back down so that I could roll the put side down, and then now I got the width that I'm looking for. Because managing to the downside is a hell of a lot easier for me than managing to the upside. For anyone, for that matter, definitely. Right? You're not fighting gravity.
Definitely.
So we'll see. We'll see. And one last one, HIMS. Because HIMS has short squeeze potential. That one's got over 30% of the short float of the float that's shorted.
Yeah, HIMS is another one it's almost like a cult-like following. It's overvalued, but yet they keep buying it. But is
it overvalued, dude? This thing's gonna give you 100% CAGR.
Well, I saw some posts from others that were listing some of the financials.
Right.
Yeah, maybe at this level it's not overvalued. I guess it was maybe more back over here where it was way overvalued. It has to, yeah, it's true. The air has come out of this one. I would say maybe this one, just based on the price action, maybe it's more fairly valued for sure. But I don't know if it's overvalued, undervalued at this point, but price action is saying, yeah, this can definitely scream higher. You know, you've got it overcame horizontal resistance. Let me just bring up my drawing tool. So this area here was a major pivot, and we could see that it couldn't get through it on this attempt. Okay, it held it held it here, it held it here. It finally got through it on a little bit of an increased volume. And so now I would expect just a little bit of basing to go sideways, maybe pull back to this support trend line, because now this trend line that once acted as resistance over here and here should act as support for its next leg to try, it continue its uptrend. And we do have, we have some points now where we can draw trend lines. So we do have a new ascending trend line on the daily time frame, based off of this action. We now have, and if we bring this one over a little bit, extend this one to the right, these two can have a confluence price area right here of about 38. So if any of you guys are looking to get in, you can maybe buy at the 38 level if price does get back there as it trends sideways and just pulls back a little bit to retest this support trend line. You've got two support trend lines coming on here. You got the ascending one here, and you've got the horizontal one here. They converge at about 38 bucks. You can sell cash secure puts below that. You can sell cash secure puts at 38 if you want to own it. If you're a stock guy, you could buy the shares, but that looks like a good buy right there, 38, if you can get it.
Yeah, and I've got, I think, 30. Let me see what I have on hands. I know 42 is the call. And again, I'm a few rolls deep already in this thing. So HIMS is sitting 42 days out, 35 on the put, 42 on the call. And I've already rolled the put up several times to help me finance the call. I thought about, and I think it's 50 contracts. I thought about just buying 5,000 shares and turning it into a covered strangle, and then I don't have to worry about it. I thought about doing that today.
Not a bad idea. And I just drew, as you were talking, the Fibonacci's. So from the all-time high of 72.98 all the way down to where it came down and kind of bottomed out here, we've got a retracement that is currently sitting at about the 38.2. All right, which that's the first. Well, the 23.6 is the first line in the sand. It came right through that, no problem. Now it's at 38.2. So I would expect that pullback we just talked about. And if you notice, we talked about the 38 level being a good buy, and that's just right above one of the Fibonacci levels. So you kind of have a little bit of a confluence area here too. So 38 to 36, anywhere in that area would be a great buy area for, if you're thinking long. Now, if it falls through these trend lines and it falls through the 23.6, then all this technical analysis is out the window to the upside. And then we have to start talking about, is it going to hold these lows that it had just made? So, but for now, it's in a new uptrend. We have a couple of data points here to suggest that it is. We have a couple of data points here to suggest that it is. So it's definitely a long at this point until proven otherwise, in my opinion, based on what the chart is showing. With a great buy area between 36 and 38 for a continued uptrend.
Yeah, I agree. Well, very cool, man. I gotta run. I got 4 or 5 FaceTimes today, and then I still gotta go get clothes from my dad's house. I can take it to the cleaners for him. But anyway, man, I appreciate you guys. I will not be going live tomorrow because we got to go out of town to go take care of the services for my mom. But I should be back Wednesday for an episode of Wheelers. So hopefully we'll come up with a nice topic for Wheelers, and then we'll go from there. But anyway, man, I got to rock and roll.
Sounds
Man.
good.
I appreciate each and every one of you guys. Uzi, thank you so much for this, man.
My pleasure, man. Prayers with you and your family, TJ.
Really helps me out to see it, to see it, and definitely got to manage these positions. I will consider buying 5,000 shares of him just because I don't want to mess with it. Because I mean, this thing could potentially squeeze, and I wouldn't mind making it quick. I wouldn't mind making a few bucks on it. But anyway, TJ the Wheel Deal signing off as always. May your sky stay blue, stock screen. Peace out. God bless you guys.
Have a good day, everybody. Good luck in the markets. TJ,
Take care. Appreciate
your family, man.
Bye bye.